Today's a special day. There's 5 things in today's market minute that I'm going to cover. All right. And it's going to be interesting. So we're going to go over the weekly numbers. We're going to look at predicting the TREB numbers because they're not out yet. And we're now in February. So I might be able to make some basic predictions in terms of what to expect in February. The third thing we're going to look at is that headline with the 1.2 million mortgages that everybody's talking about. Fourth thing we're going to talk about is the tariffs. And fifth thing, we're going to talk about overall market prediction. So today's going to be a little bit longer than usual. I'm going to try to squeeze it into the same 15 to 20 minutes that I typically do. So let's jump right into it. Now, first and foremost, we'll go back and quickly look at the numbers like we do and update them just so that we can kind of predict months of inventory. So let's do this here quickly. Let me pull this up. And if you look at the numbers, so looking at the week of the 25th, we had 1197 listings. So look at this. 1197 listings. This is going to go up now, right? Nope, sorry. This is condo. So let's go back to freehold. Okay, 1197. So that number didn't change. That's great. Now, looking at the number of sales, we expect these to go up because we know that they're not reported properly. So 25th number of sales is 484. So up from 367, we're at 484. Let's go and continue to look here. So let's take a look now at the week before, which is the 18th. The 18th, we're looking at 1326 listings. That's fine. In terms of number of sales, we're looking at 405, so up just marginally. And then let's go back to the week of the 11th here. And on the 11th, we had 1243 listings, hasn't changed materially. And then 364 sales, so that's the same number. And then the last number to fill in here is the first week, the 4th. So 523 listings hasn't changed and 364 sales. So not 364, we're looking at 242. So based on this, we're now adjusted at 2.86, right? Months of inventory, extrapolating that data. Now that we've extrapolated this data, let's go in and fill in the numbers from the week before. So let's look at February. I mean, it's really till the end of January is what we're talking about here. So we've got 1418 listings, which I don't think will change too much next week. On the flip side, we have the number of sales at 1197. So 380 sales here. So putting that number in, we're sitting extrapolated at 3.04 months of inventory as far as January is concerned, right? This is all the way up until 1st of February. Now, we know that these number of sales is going to go up. It's not going to go down. I don't think this will be lower. So next week, it'll probably adjust to closer to 2.86 anyway. So that's what's happening in terms of the weekly numbers on supply and demand. Looking at what this translates into from an cost to sell ratio perspective, weekly, last 12 weeks, we're up just slightly. So the upwards trend isn't kind of going away. It looks like each and every single week, that ratio is continuing to uptick. Now, it's interesting because if you see a listing that's listed for $699 and then sells for 1.1, that's going to skew the numbers a bit. But I haven't seen too many examples of that, although some of our team members have sent me examples of extreme scenarios. But for the most part, I think most properties are undercut by 50 to 75. And then they're going very close to asking or over asking, depending on if there's multiple offers or not. So average ask to sell ratio is up, which tells you that people are selling. Movement's happening. We're not going under asking, which tells you that most properties that are positioned properly are selling and being disposed of. In terms of average days on market, it hasn't done anything crazy, but it's been down, right? So 25 days on market. And again, I know this is going to adjust next week. The last time we saw 25 days on market on a weekly basis was week 3 November. So that's pretty cool to see that, right? So it's going down, and the expectation is that it's going to continue to go down, save and except for, I think, consumer sentiment based on this whole tariff nonsense that we'll kind of try to unpack at the end of it. Now, looking at the sales price, so sales price wise, we're sitting at the same range, 1.3. Now, supply and demand, when you look at this, supply and demand, number of listings has been going up weekly, yes. If you look at number of sales, it's also going up. So when supply and demand go in the same direction, what do you see? You see normalization, and that's what we're seeing. That's why prices aren't deflecting and deviating in different directions. If the number of sales were up and the number of listings were down, prices would go up. Versus if number of sales were down and listings were up, prices would go down. That's just the way supply and demand works. But we're seeing this continued mark at 1.3 because it hasn't shifted all that much as far as I can tell you. Now, let's go in and look at condos. And then we're going to come back and try to make some predictions in terms of what to expect with TREB. So condo segment, we'll look at, let's update the week before. So week before, we're sitting at 5th with 853 listings. That hasn't changed. Number of sales up to 214. So up slightly, right? Look at that number start changing right away. So 214, The week before, we had 984 listings. Number of sales, we're looking at 216. So let's fix this here. 216. Week before that, the 11th here, we've got 1025 listings. That's fine. Number of sales, 230. So up by just a little bit here. And then the week before that, we're looking at 386 versus 139. So up just 2 points there. So adjusted, we're sitting at 4.06 months of inventory. 4.06 months of inventory extrapolated suggests a balanced market, right? 0 to 4 months of inventory, we're talking about a seller's market. 4 to 6 months of inventory, balanced market. 6+ months of inventory is a buyer's market. So we're teetering into that balanced market now. And again, I suspect that when everything is said and done, it'll adjust a little bit, although there is some news I'm going to share with you on the condo front towards the end of the presentation. Now, looking at the other optics here, so let's look at filling in the first week here. So number of listings, 912. So 912 listings. Number of sales now, we're talking about 161. We know this is going to go up, right? It doesn't make any sense. So we're sitting at 4.33 months of inventory extrapolated. Again, same sort of thing. Now, supply looks like it's been a downwards trend for the most part. It's looking like it's coming down, and so has demand, right? Number of sales are kind of looking like they're trending downwards, which I don't think is abnormal for the current condo market. Now, looking at the average ask to sell ratio, it hasn't done anything specific, right? It's just kind of hovering at the same range, but that's expected because you guys have to remember, 5 years ago, we sold about 30,000 pre-construction units in the GTA. So what's happening is that cycle for building is up. Those 30 to 40,000 units are hitting the market, right? Back in 2020 was a great time for pre-construction. We were hitting all kinds of records, right? Pre-pandemic, pre-COVID. So all the properties that people picked up 5 years ago are now coming in for closing now. And so that's why we're seeing the surge of inventory, which is impacting the condo market, especially on the rental side for condos as well. So average ask to sell ratio is not doing anything crazy. In terms of days on market, it's down. It's probably going to continue to start going down a little bit more. That's also because we're in February now. So by the end of Q1, things are going to start warming up. I think it'll pick up a little bit on the condo front as well, especially as people become more educated and understand what to expect with the current marketplace. In terms of sale price, again, it looks up week over week. So 731. I think it'll probably adjust when we have the data from next week, but we'll see. But that's optimistic, right? It's been flatlined. Now we have a bit of an anomaly this week. That's cool to see that. Now, looking at the predictions. So let's quickly look at topic 2 for today. So let's make some predictions. If I take this and I extrapolate this monthly, I look at the last 3 years. So again, what I've done is I've refined this, right? So we're looking at GTA freehold, not including Alton in these numbers here specifically. So if I look at number of listings in January and I compare them to number of listings last January, number of listings last January in 2024 were 36 listings last January versus this January, 5,495. So what does this tell me? Tells me that Treb is probably going to release numbers saying that listings are up year over year. Now, what about number of sales? So we know that the numbers for January may tweak just slightly next week, but we'll see. So 1765 sales this year, 2025, versus last January, it was 2118. So with the adjustment after this week's numbers, will it go and cross that number? I don't think so, but you never know, right? So listings will be up. From what I can tell you, sales will be slightly down. And now you have to kind of compare and contrast this with a couple of factors. So first thing I want to remind you is that last January 2024, rates were at 5% and inflation was 2.86%. This January, interest rates are at 3% in terms of Bank of Canada, okay? Inflation is at 1.8% with the GST holiday, and I think closer to 2.2 if you add in the GST HST. So I'm waiting on those final numbers and we'll pull that in. But it's interesting that money's cheaper, but we're not seeing as much momentum from a sales perspective. So that is interesting to me. But you also have to remember on the backdrop side of things here, January 2020, this is after we had steady 5% announcements. So people had kind of taken that information in and let that set in, and it normalized. People were kind of like, okay, we're cool, it's over. We've had a couple of announcements where nothing has shifted. So that could be why it was a little bit more normalized then. The number of listings probably up, number of sales likely to be reported down. In terms of our sale price, so we'll do the same thing here. Let's look at the last 3 years monthly. So January 2025 sitting at around 1.3. And if I go back now to January 2024, it's looking like 1.3. It's about the same. So I expect Trev will report that we're very close to last year. Maybe we're up slightly, maybe down slightly, but it shouldn't be anything crazy, just like we saw in the previous market update for the previous month. Now, that's what we think is going to happen in terms of Trev's reporting. The third thing, so let's talk very quickly about the headline that you've all seen. This year, 1.2 million mortgages are renewing, okay? And I want you to start thinking about this tactfully. So that's a great headline, but let's take into consideration some of the optics around that. So 20% of the 1.2 million mortgages that are renewing are variable, meaning these people have already been slapped, right? They're like the rest of us that didn't lock in and get lucky. They have already felt the pinch. They know exactly what that is going to feel like on renewal. They're already paying those rates. The 80% of people in that 1.2 mix that are fortunate enough to have locked in at that time, they're in a different camp. Now, what's interesting about that is two things. One, when you look at the interest rates that they were locking into, the Bank of Canada rates in 2020 were between 1.75 and 2%, depending on the month that you renewed in, right? So you look at that and you look at where the interest rates are now for the Bank of Canada, we're sitting at 3%. So what are we talking about? We're talking about a difference between 1 point and 1.25 point on renewal. The other thing you have to keep in mind is that the average person that locked in 5 years ago, they have saved a ton of money in the last 5 years because they've got really good rates. So on renewal, I asked Omer from Six Mortgages to run some calculations for us, and he sent me this really cool chart that I'll share. What his calculations are showing that on average for $100,000 on mortgage, so let's say the average mortgage is $600,000, for every $100,000 on your mortgage, your payment's going to go up by $100. So let's say you locked in 5 years ago. You were one of the lucky people that locked in at that low rate when banks were competing as well. It was prime minus at that time, if I remember correctly. You're going to pay now $100 more per 100,000. So if you've got a 600 mortgage, you're looking at $600. But banks are competing on rates now. If you're shopping around on renewal, you probably get prime minus. It's possible to get a very good rate right now. So with that, is this going to be real shell shock for these people? I would think not. If I was smart enough or lucky, really, I think a lot of people were just lucky enough to lock in 5 years ago, and I saved a ton of money. I've built a bunch of equity and appreciation. Like I'm not complaining. I'm probably really happy. Okay. The other thing, so you've got that. So I don't think anyone's going to be alarmed. We're not going to see an inordinate amount of hour of sales or anything like that, because the 1.2 million mortgages, very few people are going to be impacted, in my opinion, personally. Okay. The other thing to keep in mind is that the correction, if you look at these charts, let's go back to this chart here. This correction, so our peak in the real estate market was February 2022. That's the highest point we've seen, right? So if I bought a property back in, say, 2020, and my average price was $964,000, if I compare this price point to where I am right now, I have made money. I haven't lost anything. Plus, I've paid my mortgage. I've got a bit of appreciation. So again, you don't wait to buy real estate. You should be buying real estate and waiting. Unless you're speculating and doing some funny stuff like that, I think as long as you're an end user, you can't lose in real estate. The people that bought February 2022 are going to feel it. They're going to feel it for a little bit. But the reality is that you'll see an upwards trend. We know, except for this whole tariff nonsense, that the Bank of Canada's target rate is 2%. So that's coming. That's inevitable. It might even change more in light of the tariffs now, and we're going to discuss that in a second. Okay? So overall, the 1.2 million mortgages should not be a real concern. Those people are going to be just fine. If you bought 5 years ago, you made money. The only people that lost money are the people that bought at the peak, in my opinion, so far. Okay? Now, let's talk about tariffs. So it's funny because I posed a question, and many of you may have seen this question. I posted a question on Facebook asking for people to clarify, with this 25% increase in tariff, which of the following is the correct answer? 10 out of 10 people that I talked to had different answers. So the first thing is that you're hearing tariffs are going up, but nobody really knows what that means. It's pretty interesting to see that, right? Like I got all kinds of different answers. I got people that private messaged me because they didn't want to be seen publicly on this, but not one person had an identical answer to somebody else. So one, there's a lot of misunderstanding around what's happening. Okay, that's the first thing. The second thing with tariffs, if you look at what's happening at the stock market today, things don't look so good. And so if investors aren't investing in stocks right now, what are they investing in? Well, they're probably going to pivot to hard assets like real estate, right? In tumultuous times, I think most investors bank on real estate because that's what you need. The other thing you have to keep in mind, and I've got a couple of charts, so I'm going to share these charts with you as a part of the package for today's market update with the flyers. As of this morning, my understanding is that Trump has already renegotiated or is in the process of renegotiating with Mexico. Anybody that's read a Trump book knows that he put something so ridiculous on the table that by the time he brings his actual, proposal to the table, it doesn't seem ludicrous anymore. So we know that, right? From a psychological and just overall standpoint, that's his personality. Not to discount the fact that tomorrow there could be tariffs. It's highly possible, but we know that this is usually his tactic. So in the event that this materializes, what should we expect? So there's 4 charts I'm going to share with you. It'll be available in the same Dropbox where everything else is available. First thing that'll happen with tariffs is that it's going to slow down GDP growth, right? Unemployment's going to go up. It's going to impact higher import prices. The 2 provinces that are going to get heavily affected by this are Alberta and Ontario. Alberta, not so much because the tariffs on energy are at 10%, not 25%. That's because they've got a side deal going on there, right? They need our oil. They need our energy. So Ontario and Alberta will be impacted. But when you look at how that translates into real estate, I don't know if it's going to impact so much. In fact, most people in times of uncertainty, I feel like most homeowners are going to continue to be homeowners. They're not going to sell and run to a rental because you don't know what your landlord's bank is looking like either. So you're not going to sell your home where you have safety and sanctity to now go rent somebody else's home where you have no guarantee of what they're going to do with that property in the next six months to 6 years even. Like you have absolutely no control. And with the way the landlord tenancy board is playing out right now, it's not too optimistic if you're in that world. Okay. So higher import prices, you might see job cuts in export industries. You're going to see inflationary pressures. So those are the four things that we'll probably see right out the gate. Now, next thing. So on the real estate market, there's a couple of considerations. So housing costs could increase because the cost of construction could go up, right? The things that we're importing, they'll be impacted. So that means things like lumber, anything that we're importing will be impacted. That's going to increase the cost of building homes. What would the government probably do? They probably cut other things, right? GST holidays, stuff like that. They try to make it manageable on that front. Second thing, lower economic impact on us, at least, job losses in energy sector. That's going to impact the Calgary and Alberta and Edmonton markets. Ontario, no, I don't think there's any refineries to my knowledge in the GTA. So not going to impact us so much. So, but for your clients that have investments in Alberta, Edmonton, Calgary, maybe, because now you've got less people flocking to these areas to support the energy sector, okay? Investor sentiment. So like I said, when you've got economic uncertainty, investors then pivot to hard assets like real estate. You might see things like gold go up, right? So things like that can start seeing an impact. And then the last thing on this is you've got reduced disposable income. So I'm not going to buy avocados anymore, right? If it's going to cost me more to buy an avocado, I can live without an avocado. But there's certain things that we're importing that I can't go without. So overall, I'm going to start, as a consumer, I'm going to start spending less money on the things I don't need, and then I'll save as much money as I can. So my household, for example, may not be impacted so much so by this, right? But it is going to reduce disposable income, which means you're going to see less people investing in real estate unless it's something that they're moving into. So those are the 4 things we can look at from that perspective. Now, next thing. So from an economic and monetary policy dynamics perspective in Canada, you're probably going to see if this in fact happens. I mean, they're talking about 1940s like depression, right? Like that's what they're talking about. So what's the Bank of Canada's response going to be? It's going to be to keep dropping the interest rates like they did with COVID. Only difference now is that we're dealing with something that's manufactured, like it's literally created because of policy, right? So that'll be interesting. So what happens historically, we know when interest rates drop, people invest in real estate. And even if people aren't investing in real estate, let's say people lose their homes, that means you're going to have more listings to deal with. You're going to have more tenants to deal with. So the real estate market's not going anywhere. It doesn't matter how you cut it. You're just going to have winners and losers, and that's in any market, right? That's just the frank reality, unfortunately, of what we're dealing with. Some people win, some people lose. When things change, those people win, those other people lose. That's the optics that we're dealing with. So you're probably going to start seeing interest rates decline. So that target 2% rate might now be 0.25% again. And if that happens and the government's injecting all kinds of money back into the economy, it's typical for households to invest in real estate. Like we saw that during the pandemic, likely to see something similar to that again. Okay. Minimum policy change. So policies could change theoretically. It'll depend on what exactly happens with tariffs. Sustained lower rates. So we'll have lower rates for longer, which means coming out of this, again, same nonsense with quantitative tightening and all of these things, just depending on the entire impact, right? So that's what we can expect. Now, the fourth thing to kind of look at. So I weighed out the pros and cons and I thought about this for a second. So cons, higher cost of housing because construction costs have gone up. Everything's kind of impacted. You've got reduced demand in certain regions, right? Alberta, Calgary, Edmonton, maybe not so hot after this, right? Like I have clients that live out there that moved out there because they work in the energy sector. Inflationary pressures are going to impact household disposable income. Pros, the safe haven in real estate. We know that. So you might see more of that momentum. And then lower borrowing costs. So depending on what happens tomorrow, maybe we'll see another month just like Mexico before they finalize something. God knows, I don't know. It's very
Ricky, they put it off. They put it off a month.
That was Mexico, not
Did to today.
Did they?
Yep.
There you go, guys. It's not happening tomorrow. Thanks,
It's
Mike.
not going to happen at all. The art of the deal. Read the book.
And that's what I was saying.
The guy plays. I know a lot of Americans, and this is his game.
Yeah.
Anyways, he wants to scare the heck out of you.
Yeah. So there we go. All right. So that'll be in the headlines if that happens. Now, last thing. So let's talk about predictions very quickly. Okay. There's a couple of things, and I've said this in passing, and I'm going to talk a little bit more about this during the market outlook on Saturday. By the way, there's like 15 seats left. So if you haven't confirmed your seat, you probably want to get that now because we're out. We're sold out after this. Okay. Okay. Couple of things to keep in mind. So last year for pre-construction, we sold about 4,600 units when we should have sold 30 to 40,000 units. The year before that, we sold 10 to 13,000 when we should have sold 30 to 40,000 units. I told you in the beginning of this presentation that the inventory that's impacting the market today is the inventory that we sold 5 years ago, the 30 to 40,000 units then. So you take that into consideration, the 4,600 units, unless it's Mattamy or the Mintos or the Daniels of the world or the Tridels, those projects are failing, okay? And then the ones that were sold last year, most of those projects are failing as well. That's why it's critical that you buy from a reputable builder right now. If that happens, and it likely will, and you're going to see less pre-con sales, in my opinion, right now, especially with this stuff with the tariffs and people being worried. The reality is in 5 years from now, all of the properties we should have sold, the 30 to 40,000 units we should have sold each and every single year in the last couple of years that we didn't sell, those properties will not be built and ready for 2020. So our population is going to continue to increase. We're in a housing crisis. Last I checked, it was 3.8 million to 5 million homes short. We can't build enough homes. It'll take 100 years to build that. And now to add to that, the stuff that we're selling isn't going to come to the market either. So my prediction is probably by 2028, 2030, this is going to get crazy because we're not building anything. Nothing's selling now. If we're not building anything, but the population continues to increase, we've got a crisis, like a true crisis. And the other thing, like condos are hurting now. You have to remember with the mortgage rate down payment changes, a lot of first-time home buyers that would have been pushed into the condo market because anything more than $1 million, they needed 20% down. Now you can qualify for just under 1.5 million with less than 20%. So a lot of would-be first-time condo buyers are now pivoting to the starter home in Cambridge, Uxbridge, like these areas where they can afford a property, and they're not buying condos. So that is adding further pressure, downward pressure on the condo market. So it's going to be interesting. We've got a great panel of speakers lined up for this Saturday. I'm really excited for what RBC has to say. We've got some tactical coaching coming in. Mohammed's going to give us a legal tidbit as well. So a lot of things we've experienced at the law office this year. So there's going to be a lot of really, really, really good stuff. And I hope to see you guys there. Does anybody have anything to add? I see a couple of things in the chat here. Let me quickly go through that. Okay, Jason just confirmed what Mike said. Tariffs extended 30 days. Guys, that's great. Fantastic. Eric, I want to attend condo presentation.
Today, for the last 2 weeks, I've been attending a lot of the pre-construction, and today's RBC was amazing. And the guy basically said that RBC predicts there's about 10% chance of Trump actually going through with all of these threats. So they're really not banking on this going through. And they're also predicting that the rates will continue to fall, and they're kind of putting at about 2% by the end of the year. But the number that constantly comes back to me, exactly what you were just talking about, the cycle, the condo cycle in 2029, at this moment, there's only about 2,000 units that are going to be ready to be moved in new pre-construction. So every smart pre-construction development that I've attended in the last few weeks, that's what they're focusing on. And they're predicting 2028, 2029 pre-construction to skyrocket price-wise.
Yeah, and I can see it. That's exactly where my head is at. And Eric, that's great feedback because it's the same guy, Dave Richardson, that's going to be presenting our keynote as well. And he'll probably have really good. Guys, if you haven't RSVP'd, there's like 12 seats left. Don't miss it, all right? And we'll see you guys then. Yes, go ahead, Farheen.
In terms of like what we're seeing for January numbers, I also think that, you know, a lot of the sales that were supposed to happen this January actually happened in Q4 of last year. And that's why we see the difference in like Q4 of last year versus the year before, right? Because people knew that, you know, they have to renew mortgages, do whatever. So I think that, you know, another reason why, if we're comparing January to January, yes, we see fewer sales, but actually we saw a big jump in the listings and sales. What happened in Q4? We had a really busy Q4, right?
Makes sense.
Do you agree to that?
Yeah, I think there's merit to that as well, right? So there's always going to be, again, Farheen, in these sort of cycles, you're going to have people that are going to either jump too quick or not jump fast enough, right? And then everybody in between. So definitely, like, I mean, I think there was a lot of uncertainty towards the end of the year, but, you know, for the agents that were out educating their clients, a lot of people pulled triggers when they should have, right? And anybody that's getting a mortgage now, even if, like, now that I saw what Jason and Mike have said, that's great. But just God forbid these tariffs did come into play, you're going to go in for a variable rate mortgage right now. And you're going to get the banks to compete with one another to lock in a really good variable rate right now that's adjustable. And so even if you buy real estate now, even on a variable rate, it's not looking like the interest rates are going up anytime soon. They're going down, right? And if you're smart enough and you time it and based on history, you lock in at a time where it starts going up again. I mean, there's opportunities out there, real opportunities.
Yeah.
Right? Okay, guys, I will see you on Saturday. Thank you, everybody. Take care.